Hey guys, welcome to the channel and welcome back to another video, another 7 p.m. video. Today I want to have a quick conversation, guys, about um, planning and investment strategy. I also want to show you my own personal investment, not just strategy, but my ETF strategy in particular, ETF portfolio. I want to talk about that. So if you're not over here on YouTube, because I'm going to share my screen a bunch, you might want to go over to YouTube, Smart Money Bro on YouTube, to take a look at the actual screen, because we're going to be digging deeper, a little bit deep into exactly why you need an investment strategy and what my portfolio is, right? What is my portfolio and what we're doing? So, as you come into the chat, guys, do me a favor. Let me know where you're coming from, what city, state, county, country, hemisphere, planet. Let me know where you're from, guys. That's cool. I appreciate that in the chat. And give me a thumbs up if you can hear me, so I know that you can hear me. So I want to talk about why I'm an ETF person, show you a little bit of my investment strategy, and really dig into why everybody really needs an investment strategy, right? To start with. That's the first thing you got to have. So we'll jump into it on this video. I'm going to be sharing my screen again and also showing you guys and giving an idea and talking about exactly what I have, right? So it's pretty much an all ETF show today. So if you're joining me on LinkedIn, if you're joining me on Facebook, if you're joining me on YouTube, wherever you're at, welcome, welcome, welcome. Glad you're here. Let's spend some time digging into this a little bit. All ETF show. So thanks for the thumbs up. Looks like Alvira can hear me. Thank you. We got Baltimore, living in Toronto in the house. We got Syracuse, New York, Dawson, Georgia. Hey, by the book, good to have you out in Southern California, McDonough, Georgia. Atlanta's in the house. Pam is in Atlanta also. Let's see. Jason is Loganville, Georgia. Good to have you, Jason. Mommy Trader, you guys check out her channel. She's got a YouTube channel here on. She's in the chat, so feel free to hit her up and take a look at her YouTube channel as well. Let's see here. Smart Money Bro, if you don't mind me asking. Yes, 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 yes. Somebody asked about, am I married? Yes, I'm married, and I have we do our finances. So that maybe that could be a topic one day, right? That could be a show one day. We talk about marriage and finances, or finances and partnerships, whatever you have, right? Tigard, Oregon. Good to have you here. And by the way, Alvira's in Queens, New York. We got Melbourne, Florida. We got Charleston, West Virginia, Seattle. So we're all over the country, right? Huntsville, Alabama, Orlando, Florida. Somebody in Malaysia. Good to have you. Oftentimes we get folks from all around the world. When I go at 7 p.m., though, when you talk about Europe and Africa, some of those countries are asleep by the time we're here at 7 p.m. Central Standard Time. So I totally get that. And a lot of times they watch it on the replay and shoot me a message and let me know they watched it. So that's pretty cool. Hopefully you guys can hear me okay. Let's see here. So, by the way, as you come in, hit the like button for me. Smash the like button, right? Maybe you know someone who wants to invest, who wants to learn about investing, who wants to jump into the stock market. Share this information with them if they're interested in investing their money and getting a strategy to do so, right? Hey, good to see you again, the Willie Willow from New Jersey. And New Hampton, New York. By the way, if you have a question throughout this, guys, put a Q in the chat, and I'll be more than happy to answer your question. But it helps me identify it if there's a big Q right there in the front of it. So, by the way, let me know in the chat. By the way, how many of you are 90% of your portfolio is ETFs? 90%. Okay, let's say 80% ETFs or index funds, because I look at ETFs and index funds the same, similar, right? So how many of you, let me know if you are 80% or more ETFs or index funds. Let me know that in the chat if you will. I want to see what we have in here. Let's see here. Appreciate that, Anthony. Listen, working, building my mind and body. Alex Prime. Yeah, I'm going to get me a workout when I get out of here, by the way, Alex. So I understand it. Late night workouts. Big Lex in Louisiana. Appreciate you. Let's see. Mrs. Moore. Wonderful talking to you, Mrs. Moore. Checking in from Atlanta. Ray said thoughts on crypto. Not a big crypto guy. A little bit of crypto. Not bad. It's another asset. Nothing wrong with that. Let's see. Jason is an ETF guy. Fantastic. And we're going to talk about that. The Willie Willow. We're going to talk about specific ETFs, right? Because I'm going to be sharing with you my specific ETFs that I own and have owned for quite a while. Houston, Texas in the house. Paid off $250,000 in debt. Congratulations to you. Good to have you here, Donna. Previously, yes, but I've moved more towards aggressive gains. Mommy Trader says she's 80% ETFs, 15% single stocks. Sounds a little bit like my portfolio. Hey, I knew we had a little something going there. We kind of understand each other. Gary's in ETFs. Let's see. So we're going to look at my strategy, right? And I'm going to actually pull up my portfolio. Well, I'm going to pull up my strategy. I'm not going to pull up necessarily my portfolio. Now, as I said before, guys, I'm very, very basic. I'm not real fancy. I'm not Mr. Graphics and Mr. Color coded this and I'm really, really, really basic, right? But before I pull up my portfolio, we'll talk about that later. Pam said, I don't know percentages, but I have single stocks, ETFs, and index funds and mutual funds. Fantastic. So you got quite a bit. You're there, right? You're doing sort of what I think is appropriate to do, having some in every single area and being very diversified, right? So let's see here. I'm just thumbing through them, guys. All right, so let me go ahead and share my screen with you guys, if that's okay with you. And we'll pull up. And by the way, let me say this about the stock market. Big day in the stock market again. I mean, big day in the market again. I mean, folks, I don't know if you see what's going on in the stock market, but it's been record breaking after record breaking after record breaking already, and we're halfway through the year. I mean, we're up. S&P 500, just share my screen with you guys, by the way, if you're here on YouTube. S&P 500 is up, it rises to record close on Monday, a record high in the S&P 500 again, right? The article, I just put up an article, rose Monday to a close at a fresh record. The broad index added 0.77. It goes on to say today is follow through from what we've seen over the last week and really over the last 6 months, right? We're seeing optimism around a number of factors that have been mixed quite some time. I'm just reading some of this article here. Mega cap tech stocks bolstered the rally as they've been doing for the last year and a half, 2 years, boosting IT sector it went up by 1.2%. Microsoft rose more than 1%. Apple jumped 2%. Google and Amazon and Meta also finished higher. NVIDIA notched a fresh all-time high, but ultimately it trickled back down and closed a little lower, right? NVIDIA did. But my goodness, guys, my goodness. Monday's gains come after the S&P 500 and NASDAQ posted their 7th weekly gain in only 8 weeks. That's 7 weeks out of 8 weeks. The S&P has had crazy gains, right? Even in previous bull markets, the upward price appreciation does not typically move in a straight line. So we're having a banner year thus far. But full disclosure, so we all on the same page. The market is always about to crash. Just understand that as you get into this stock market investing, the stock market is always about to crash. It's always close to a crash. Something's going to happen that makes it crash. So please, guys, just be aware of that, right? We don't want to go into the stock market kind of like blind and just thinking, oh my goodness, everything is wonderful and it's always going to be wonderful, because it won't always be wonderful, right? We got to know that. So just something to think about, guys. Let me share my screen again with you real quick. Let me just show you my strategy, my ETF strategy. And I've tweaked it a little bit, but on this screen I'm going to show you is exactly what I am invested in. Let's go ahead and jump right to it so you guys can see. I think I'm sharing my screen. You guys let me know. Yep. So this is what I have, and I've had some of these for a long time, some of them for not so long. So if you don't know about me and my portfolio or me and my investing style or type, and you're new to the channel, I work for the federal government, so I have a TSP, and in the TSP, it's the federal government's retirement plan, similar to a 401k, a 403b, similar to those retirement plans, right? And so inside of that TSP, you have 5 or 6 different funds you can put your money into. And those funds are really like low-cost index funds, right? The S, the I, the what is it? The C, the F, and the G. These are low cost index funds. Some of them follow more of a bond market. Some of them follow the S&P 500. Some of them follow the total stock market. So a little more volatility, which is the S fund. So a lot of money is over there. Now, I have other money that I invest as well into a separate account. And typically I'm a Vanguard guy. So I use a lot of Vanguard guys. But you'll see here, part of my strategy, the main gist of my strategy is diversification around at least one broad-based ETF or broad-based index fund. In this case, guys, and in this case, it's just an index fund. I go with VFIAX, 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 right? Get that out of the way there. VFIAX is Vanguard's S&P 500 index fund. Let me just pull that up if you guys are okay with that. Let's see here. Let me pull up VFIAX. Let's see here. Oh, there it goes right there. This is an all ETF show, guys. So that's what we're talking about here. And if you're invested in ETFs, excellent, wonderful, fantastic. You're going to enjoy what we're talking about today. If you're new to investing, which I know on my channel, we have a lot of people that are new to investing, haven't been investing more than 5 or 10 years. If you're new to investing, index funds and ETFs are a great place to sort of dip your toe in the water of investing, okay? Here's VFIX, and I just pulled it up on my screen, guys. Let's see, there it goes. Okay, so Vanguard's S&P 500 index fund, Admiral shares. Vanguard calls it Admiral shares. That means there's a $3,000 minimum to get into VFIAX, okay? $3,000 minimum. If you got $2,500, you can't invest in it, right? And so that's some platforms do have minimums for their index funds like Vanguard, okay? But this is the strategy, part of the strategy, and we all need a strategy, a written strategy. I have a written strategy, not in paragraphs and words, but in what I own, what I have, and this is what I'm looking for, right? I have a written strategy, but I just showed you what I owned, right? Just a second ago. I might get back to that in a minute, but one of them is VFIAX, right? Very low expense ratio at 0.04%. It's a large blend, which means it has a little bit of value, has a little bit of growth, but we know that a lot of the S&P 500 is technology, right? We'll get to that in a second. So $3,000 is your minimum to get into VFIAX. And again, I'll just go through a few things. First thing is what the rating is, the risk rating, 1 through 5. Risk 1 is very, very low. I'm on the Vanguard platform. Very, very low risk, like a government bond. A U.S. Treasury might be a risk level of 1. Now, when you get to something really volatile, it's going to be a risk level of 5 on the Vanguard platform. So S&P 500, pretty stable to me, but it does offer some risk. So it ranks as a 4 on Vanguard. And if we look at past performance, great. Year to date, that means since January 1, it's performed at 11.28%. And year over year, since this time last year, 28.14% that it's up. That's huge. That's tremendous. Look at the 3-year, look at the 5-year, look at the 10-year. That is solid. Very solid. Very, very solid. And there's equivalents to this, right? If you do State Street, you go do Invesco. If you do BlackRock, if you do Fidelity, if you're on Charles Schwab, there's equivalents to this VFIAX out there on those other platforms as well. So one of the things I like to look at, though, on this is I like to look at the price, and we'll go over these things. This is part of my strategy right here, having one, at least one. Like I don't need VTI and VOO. They're the same thing, right? Pretty much, because the S&P 500 is pretty much, in terms of performance, very, very similar to the overall. I used to have VTSAX. Was it VTSAX? The total stock market. But now only have the S&P 500. Only want the S&P 500. Don't want the total, right? Total's going to have a little bit of that small cap in there, and I really don't want small cap at this point in my life, right? So Large blend, like I said, blend meaning a little bit of value in there, a little bit of growth in there. So it's a blend between value and a growth ETF, the S&P 500, the VFIAX, or whatever equivalent that it is on your platform. Look, I always like to look at the portfolio composition because I want to know what's in my bucket of stocks, my bucket of ETFs, my bucket of index funds. I want to know what is in there, what types of companies and sectors are in there. And when you look at the S&P 500 VFIAX on Vanguard's platform, 30% of it is IT. And this 30% is what's really driving the wonderful performance of the last 3 to 4 or 5 years in the S&P 500. Of course, it's 13% financials, 12% healthcare, two other places that I really enjoy, and you'll know why later. I'll talk about that later. Excuse me. But that's the holdings. And here's some of the top companies, obviously, in there, right? You got your Microsoft is in there. You got your Apple. You got your Nvidia. You got your Amazon, and they're shown by their weight right here, right? They're shown by their weight. You got Meta, Google, all of those Mag 7 companies carry the biggest weight in this particular fund. But I like the S&P 500 over the total stock market index fund. Now, I said ETFs. This particular one is an index fund, but it's a part of my portfolio. A piece of my strategy is to have at least one broad-based ETF or index fund. Now that I have a broad-based index fund, guess what? I don't want to have VOO, the broad-based index, the broad-based ETF that covers the S&P 500. I don't need it because I already got the index fund, right? So I just want to show you that this is a piece of what I try to do in my portfolio is to make sure I keep something tracking the S&P 500. Something that's tracking the S&P 500 is really important for me. Piece of when I do my checks on where I'm at in terms of investing, this is what I look for. It's very important. For a lot of years, I did have the broad big one that covered the entire stock market, but I said, let's go ahead and just go with the 500 right now, because the thing about my portfolio that you'll notice here, guys, is that my portfolio is a little bit aggressive, right? And you're saying, well, smart money, bro, you're like in your early 50s, right? And I'm in my early 50s, right? So, man, shouldn't you be maybe making an 80-20 split, 20% in bonds and 80% in the S&P in the stock, in the market itself? No, because I want to stay aggressive. Because if I don't use this money, somebody's going to use the money, right? If it's not going to be me, it's going to be somebody using it 30, 40 years from now that's not me. So I want to stay aggressive and not just take the 1%, 2%, 2.5% return on 20% of my portfolio, which may be in the bond market or something that's like a corporate bond or something like that, or government bond, U.S. Treasury, right? I want to stay aggressive at least for the next 10 years or so. So you'll notice that my portfolio is like that. All right. So VFIAX is one thing that's smack dab on my portfolio. Let me see if I can't go back to my portfolio real quick and continue to show you guys a plan so that you can understand that you need to do a plan, right? This is why you need an investing strategy, right? Why we all need a strategy that's written down so we understand and we have some direction for our investments. So if you look at the ETFs, that's really my main index fund right there. But look at the ETFs I have, and I have a strategy, but I'm just showing you exactly what I have here and explaining the strategy along the way. Guys, don't forget to hit the like button for me, hit the thumbs up button as we share this information. If you know somebody who's interested, who wants to start investing, who's a new investor or maybe a unseasoned investor, please share this link with them as well. I appreciate it. So large cap growth, large cap value, the difference. Value is a little more stable, not not subject to such volatility that a growth ETF might be. Growth ETF is for, company, just like a growth stock, companies that are up and coming that may have a chance to experience some large growth. That's what the large cap is. Large cap growth. Large cap value are large companies. By the way, cap, we're talking about market capitalization, right? How big the company is. The price of one share multiplied by the outstanding shares that are out there, right? So you got large cap, mid cap, small cap. I like to play in the growth and the value space. The growth and the value space, right? I don't want to have everything in the value space, and so that I'm missing out on some of the potential big gains that are out there. But I don't want to have everything in the growth space for growth ETFs, so that I'm also kind of hedging myself a little bit and hoping and hoping and hoping, and I have no value ETFs that are a little bit more steady, right? So I like to play in the growth area and the value area, right? And then I like to play in some sectors. So for large growth, part of my portfolio is VUG. And let me just pull up VUG while we're at it, right? Since we're talking, since we're sharing screens, let me see if I have VUG somewhere here. Maybe. I don't know. Let's see here. Give me a second here, guys. Bear with me. I'm still learning. There it is right there. All right, let me share this VUG with you guys real quick. And just take a look at it, right? And this is the beauty about ETFs. One of the beauties about ETFs is we don't have to dig into the 10Qs and 10Ks. We don't have to do all that necessarily, because I got 80, 90, 200, 300, 600 companies in the bucket. I don't have time to do all that detailed research about each company. But I do understand what's in the bucket, right? And what types of companies are in that bucket, which help me make that decision. So here's VUG. And if you're not on YouTube, feel free to come over to Smart Money Bro on YouTube so you can see my screen if you're not able to see it. I think some folks are not able to see it. So if you look at VUG, I'm on VUG. I'm looking at VUG, also on Vanguard's platform, of course. Large growth, right? Large growth. Super duper low expense ratio, which means very inexpensive to own this ETF, right? Very inexpensive. At the admin fees and all those fees, they're not super duper expensive. Wonderful. Great. Current market price looks like it might be $375.50, $375. Quick overview, right? My computer works. Quick overview. Large growth category. Inception date was back in 2004. It's an index. It's an ETF or an index. Year-to-date returns 20%, 20.91%. Year-to-date since January of this year. Huge. Rating between a 1 and a 5. 1 being very, very safe U.S. Treasury bonds. 5 being something that could stand the test to have a little bit of volatility, right? But this one ranks at a 4. So large cap growth ETF at a 4. I have VUG in my portfolio. Looking at the overall return, say for the last 10 years, nearly 15% return for the last 10 years, nearly a 19% return in 5 years. The 3 years only at 9.73. Remember what happened back in 2022. In 2022, the entire stock market, S&P 500 primarily, but that's an indication of the entire stock market, was down by like 18 or 19%. So I think that drug the 3-year down, and that's why it's only 9.73. But year over year, since this time last year, VUG is up 33.34%. That's ginormous, huge. You'll see why when we look at the portfolio. If you look at their portfolio, again, it's a large growth. And if you look at the portfolio and you look at the sectors, the primary sector is what? Technology. 58%. What did I say was dragging the S&P 500 way up in the last 6 months to a year, 2 years or so? Technology. And VUG has a lot of technology. You may be saying, well, gosh, 12% of it's Microsoft and 11% is Apple and 10% is NVIDIA and Amazon. So, man, that's tech heavy. 23%, 33%, 40% is Microsoft, Apple, NVIDIA, and Amazon. 40% of this fund. So this is a big time growth fund. But listen, I want to be heavy in technology right now, right? That's part of my strategy. I look at my strategy and say, you know what? I like what I'm seeing out of technology over the last couple of years. Technology is going strong. Why is technology going strong? Well, you got AI. Well, you got all these platforms. Well, you got more and more people on the internet. 5 years ago, you had, 80% of the people in America were using the internet all the time. And today, 90% of, so it's like it keeps, technology is here and it's here to stay in a big way. And so I want to be heavy. The part of my strategy, be heavy in technology. That's part of it, right? So that's why I hold VUG. I've got another real heavy tech ETF as well that I'll share with you in just a bit. So I'm just sharing with you why we all need an investing strategy. Because what the investing strategy does is it narrows my focus. See, there's 3,700 stocks out there, right? And there's thousands and thousands, there's thousands of ETFs, right, that I could be investing in. But if I narrow my focus, then I don't have to jump at this and jump at that and so forth. Now, I have a single stock or individual stock strategy as well, right? So we'll talk about that some other time. So don't forget, guys, you got to hit the like button for me. Please hit the like button for me, guys. I really, really would appreciate it. Let me just say a couple other things about that. Well, let me get some housekeeping things out of the way, right? Guys, let me know, or let me, or not let me, look in the description box of this video here on YouTube, and you will see 24 Laws of Money, a free ebook from me to you. You'll also see a link. The very first link you'll see is a link to our membership page, right? On another platform. So the join button on YouTube, don't click that. But if you go to the other link, the first link in the description box here on YouTube, you'll see where we are meeting it to go deeper into investing, to go a little deeper over there. If you can join over there for free. It's you'll only get, if you join for free, you'll only get like a thought of the day or something like that. If you join as a paid member over there, you're going to get much more. Right? $9 is all it costs, and $24. What you get with $24 is you have a conversation with me. We can discuss your personal finances on a monthly basis. One time a month, we pick up the phone. We have a conversation for 20 minutes, 30 minutes, and we just talk about your personal financial situation and what I would do and how I would think and so forth in terms if I was in your situation. Everybody's situation is different, and I realize that. And a lot of times you see people out here giving financial advice, and they're giving blanket advice. And a lot of times with finances, guys, blanketed, there's a few things that blanket works for, right? A few concepts and principles, right? Manage your money right. Get out of bad debt, right? Those real overall big things. But there's a lot of things that really depend on your situation, your age, how much you have, how much debt you have, where are you at in your investing knowledge and information, right? Where all these things, what city do you live in, right? Where all these things matter. And they're different from person to person. So if you go over there and join that, if you join as a paying member, $24 a month, which is nothing to have a conversation to get another set of eyes on your information that you, or we could talk about anything. We talk, a lot of people I talk to over there, we talk about, side hustles, how to start how to do a YouTube channel, how to start an eBay business, how to do voiceover, whatever. We talk about anything you desire over there. I also do one-on-ones as well that last 90 minutes. And you'll see a link to that as well. We usually do a Zoom call for those and share screens and really dig much, much deeper on those. So all that's in the description box below, guys. Feel free to check that information out. Don't forget to hit the like button and share the link to this video. So let's go back to my strategy. My strategy. I'm showing you why you need a strategy. Urgent, urgent, urgent. Don't just start throwing your money into the stock market. You got to come with a little bit of a plan, a little bit of a strategy based on your own risk tolerance, based on how much money you got, how much you can afford to lose, how much are you also getting a match from and investing in another Roth IRA. Now, all that matters to develop your own strategy, right? So let's go back over there and share my screen again because I want to show you another piece of the strategy. All right. So bear with me. Let's see here. All right, cool. All right, so over here, guys, large cap growth, large cap value. But guess what? Right now, this is real talk, real time, real talk. I got VYM, I got VTV. I don't need them both. I'm going to have to make a decision over the next, couple of days. I'm going to make a decision about which one I want to keep. Now, here's why. Let me show you why I don't want to keep both. If you're investing in ETFs, you got to understand the concept of overlap, right? And I actually have both of them because I just wasn't sure which one I want to have. So let me share my screen again with you and show you why I'm a little perplexed about which one I have. And maybe you guys can help me make a decision right now, to be honest with you. Um, let's see here. There it is right there. VYM and VTV. I just brought it up. Cool. All right. So you probably can see my screen. By the way, if you look at the screen, that looks like one line. That's actually two lines. The lightest line is for VYM and the darker line is for VTV. This is how close they're tracking. They're pretty much the same ETF. Lots and lots of overlap, right? In terms of performance, we're talking about performance right here. So they've performed in the last year basically identical, right? With VTV barely outperforming VYM in the last few months. So which one do I want? Which one do I want to get rid of? Which one do I want to hold on to? I got to figure that out, right? Let me go back to that. Let me see if there's a where that tab is. Sometimes that tab eludes me. Here we are. Little comparison. VYM and VTV. One's trading at what? 119.39. One's trading at 161.44. Right? Not really an issue because if I buy one, it's going to be, it's going to be 5, 10, 15 shares. And so I'll transfer the shares in VTV over to VYM. So Vanguard's the issuer. Expense ratio is a little bit cheaper for VTV. Slightly cheaper, but 0.06% is really, really cheap, right? Now, here's a kicker. VTV has twice the amount of AUMs, right? Twice the amount of assets under management. And therefore, it has twice the amount of assets under management, but it's got like 3 times the amount of average daily volume in terms of trading and so forth, right? Remember, this is an ETF, and you can trade ETFs throughout the day. One tracks the FTSE high dividend yield, and one tracks the large value. That's the thing I like about VYM. VYM does give you back some. It's the dividend stock, or it's the dividend ETF for Vanguard. It's the primary dividend ETF. So that's one of the reasons I kind of like VYM, even though it's not at this point giving me the same return in terms of performance as VTV. So you guys let me know what you think. If you guys VYM versus VTV, and tell me why. I need to make a decision about that pretty quick, guys. So again, my strategy though is I like to keep a dividend ETF hanging in there somewhere, right? I like to keep a dividend ETF, and that's what VYM has been. Actually, I've had VYM for quite a long time. So, but I'm looking at VTV and I'm saying, I don't need both of these. Let me go ahead and let's stay with just one. So if you guys got a suggestion for me on that, let me know in the chat below. Which one should I get? Which one should I not have? Which one's better? VTV, way bigger AUM, assets under management. VYM, much less. What I'm showing you is a piece of my strategy, guys. Believe it or not, this is what I do on a lot, maybe too much. All right, let's go back over to the holdings that I have. All right, so back here on the holdings, let's see here. There it is, right there. Okay, so got a large cap growth, large cap value. I think I'm leaning towards VYM on that, to be honest with you. And by the way, if you don't have Vanguard, that's not your platform. There's equivalents to all of these on Fidelity and on Charles Schwab and wherever else you go. There's equivalents all out there for these. I also have a little bit of mid-cap growth and a little bit of mid-cap value. So as I said, I'm in the growth space, I'm in the value space, and then I also have large cap and mid-cap. I don't have any small cap. I don't like to play and dibble and dabble with small caps, right? I prefer large to mid, not even very much mid. If I was to weight this, I would have not much mid. Most everything is large cap. Again, sort of aggressive is what my portfolio and what my strategy for investing in terms of ETFs are right now. So mid cap growth, I've got some VOT, I've got some VOE, and then I like to be sector specific with some of my ETFs, right? And I know things about the tech sector. I know things about financials and I know things about real estate because I've owned real estate for 24 years. So I feel like those are the areas I play in. I don't like playing in healthcare because, to be honest with you, a lot of healthcare stocks they carry a lot of pharmaceuticals, and I don't like pharmaceuticals. I don't like the pharmaceutical industry. So because I don't like the pharmaceutical industry, I really don't want to hold ETFs that have 12 or 20 or 30% pharmaceuticals in there. Call me weird, call me strange. But when you think about it, guys, when you're investing in individual stocks or ETFs or index funds, sometimes you don't want to invest in something that doesn't fit your values or your morals or things that you believe in, right? I mean, you got to get to that point too when you're investing, right? If this company is doing something that you really don't believe in, you don't like what they're doing, you don't like how they handle this, you may want to just go ahead and stay away from that stock or stay away from that ETF. And that's kind of what I do with the healthcare industry. Because, and don't get me wrong now, healthcare is cool. We all need healthcare. I'm not against healthcare, right? But at the same time, I'm like, you know. So that's just a sector that I don't really stay in I don't do much in at all. But I do things in the financials. Not, and everybody's different, right? You may say, "Oh, you Mr. Moral on healthcare, but not Mr. Moral on financials." I just understand the financial industry a lot better, and I certainly understand the other two as well. Let's look at VGT, which is over. I told you earlier that I'm heavy in tech at this point, right? As a lot of us probably are. So let me stop sharing that. I want to look at VGT real quick. All right. Just giving you a sense of my strategy, right? What I invest in, why I invest in it. I don't think I have VGT up, but let me pull up VGT. Give me a second, guys. Let me see if I can't find it and get it on screen real quick for you. There's VGT. And when you see VGT, I'll throw it up there. Let's see. Boom, boom. Close that. Bap. All right, I'm getting there. So VGT. Here we go. All right. So VGT, as you look at VGT, you'll see that. Let's see. Am I on there? Yeah. Nope. 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 Stop sharing there. I think I got to share here. Okay. I'm learning. All right. Here we go. Right. There it goes. Right there. All right. So VGT. It's Vanguard's IT ETF, right? Notice the expense ratio is a little bit higher, still fairly low, right? Expense ratios that are 0.10, 0.10, 0.10, pretty low, right? But look at the price now, 586.22, $586 per. All right. Technology is the category. Kind of up there in terms of price. Was trading last year, I think, early 400s, late 300s last year. So year-to-date performance, 21.34%. Excellent over the last 6 months. And you'll see why when I show you the holdings, right? So it's 5. It's a little more risky, right? And when you look at performance, look at this amazing performance of VGT. Year-to-date, or 1 year, 29%. 10-year, 20% return. That's pretty eye-opening. 20% return in 1 year, guys, in 10 years is really, really nice. That's really, really nice. When we look at the portfolio composition, I'm looking at price, but I want to see something. Okay, quarterly. There's the expense. Okay, so look at composition. It's got 321 stocks in the bucket. 321 stocks in the bucket. What sector? It's a technology. So it's going to be heavy, heavy, heavy technology. System software, 22%. Semiconductors, 30%. Who have we been talking about? That's the leader of semiconductors or in that area is NVIDIA. All right. So let's look at how it's made up. Microsoft takes up about 16, almost 17% of the bucket. That's the weight. Apple is almost 16% as well. NVIDIA is about 14%. Broadcom is about 4%. So add those up. That's 20, that's 30, 46, 50% of this particular ETF is in 4 companies: Microsoft, Apple, NVIDIA, and Broadcom. 50% of its holdings. But again, it's up 20% in the last 10 years, over a 10-year span. All right. Another part of my strategy, guys, and something you can put into your strategy is the ETF. I'm a buy and hold ETF person. So I'm not a person that's going to do a lot of selling of ETFs throughout the day and all that good stuff. I buy and I hold, right? So VGT has been a good play for me for the past few years that I've had it, and I just continue to hold it and continue to dump money into it. So VGT might be something you would consider. Now, there's other equivalents on other platforms as well, right? So that's a piece of the strategy. Of course, I'm not going to bring up, now let me just explain real estate, okay? I am not a big REIT guy, or EITs, right? Real Estate Investment Trust. Not a big REIT person. But I like to have a little bit of VNQ in my portfolio, the Vanguard ETF VNQ, just because I understand the real estate market and I've been around the market so long. I can kind of play that a little bit, see what we got in there, and I can kind of continue to dibble and dabble with real estate in VNQ, right? So that's why I have, so I'm large cap, I'm mid cap, I'm large cap growth, I'm large cap value, I'm mid cap growth, I'm mid cap value. And the value is just to sort of hedge against some of the volatility I might experience in the growth. But I haven't experienced a lot of volatility lately because tech stocks are heavy in those growth ETFs, and they've been doing just great for many years. And then the sector specifics are things I know about and understand: the financials, the real estate, and the tech, right? And I like to cap all of that off. This is part of the strategy. Cap all of this off with a broad-based index fund. And when I say broad-based, I like the S&P as my measure, as opposed to the total stock market or the total global market, right? You can get ETFs that track everything on the globe, right? Pretty much. So the point is that that's my strategy in terms of ETFs, right? The kicker is, what's your strategy, right? We all have to have some type of strategy when we're investing. We can't just invest willy-nilly. You should have a written strategy, right? What do I look at when I look at ETFs, right? I don't have to pull up profit loss statements, balance sheets, and all that good stuff for each individual company, right? I'm looking at, what does it cost to own the index fund or the ETF? What does it cost? The cost of it, the price of it, is in its, fees and expenses. That's the expense ratio, right? I'm looking at, okay, what risk am I I want to be a little aggressive on here. So I'm looking at the risk level, right? I'm also big time looking at what's in the bucket. What are the companies, the holdings, and the sectors that are in the bucket? Is it heavy technology? Is it heavy financials? Is it heavy healthcare? Is it heavy consumer goods? What's in the bucket? What types of companies are in the bucket? I'm also looking at the category. Is it a large cap? Is it a mid cap? Is it a small cap? Is it a value ETF or is it a growth ETF? Remember, value ETFs are going to give you a little bit better dividends, going to be a little more stable, a little more like your AT&Ts, right? Those good, solid, stable Procter & Gamble's that have been going on for 30, 40 years and are pretty stable, right? That's going to be your value. Where your growth is going to be the up and comers or the things that have been around 10, 15, 20, 30 years, but they're growing. They got potential for growth. That's your growth. So I've got a little bit of both. I'm looking at that category. I'm also, in my strategy, I'm looking at market price, right? Typically, I buy more than one share at a time. So market price is one thing, but it's not the biggest thing for me. Right? I just like to get a good feel for the overall product that I'm buying in terms of an ETF, right? As you notice, I'm heavy in large cap. I'm heavy in technology. I have an aggressive portfolio in terms of my ETFs, right? And you might be asking, hey, where are your bond funds? Where's your small cap? I don't do bonds or small cap in my ETF strategy, okay? Now, if you do, that's cool. It's personal preference. You might be 55 years old, 60 years old watching this and saying, hey, I don't want that volatility. I don't want a bunch of growth ETFs in my portfolio. I want the stuff that I can rely on to give me a solid 3 or 4% return. That's cool. Everybody is different. Personal finance is personal, but you got to have that written in your strategy, right? This is the key for a lot of people. Most people don't have a written strategy for their finances. Listen, very, very few people have it written down. They just have it in their head. What do they invest in? Why they invest it? And they don't have it written down, right? You want to have your strategy written down so you understand it, and you can sort of it's sort of, when you write things down, it plays differently in your head, in your brain, when you write them down, right? But there's a lot of people out here that are new to investing, right? A lot of people are new. I think 40 or 50% of all investors are in the market right now in the last 5 and 10 years. Just got in the market in the last 5 and 10 years, in retail investors, right? So that means that this is what I always say, before you do that, what are you doing and why are you doing it? Right? What are you doing and why are you doing it? Right? You got to know that. Know your why. What's your goals? Do you have your goals written down in terms of investing? What's your strategy? Do you have it written down in terms of it? Develop and write it down. Doesn't take 2 seconds, right? I can pull up another spreadsheet, and on that other spreadsheet, I have it written down, right? And that's it. My strategy written down is 7 or 8 sentences. It's not very much, right? But if I want to figure out, should I buy an ETF, I look at that strategy, and then I look at my current holdings, which you just saw, and I make a decision to see if I want to buy an ETF, if I want to replace one of the ETFs, sell what I got, get what I want to pick up, or not, right? But I consult myself, and myself is written down on a piece of paper, or not piece of paper, but on the spreadsheet, right? Develop your own strategy. You got to have it, because that's going to be your guide. Be consistent with your investing. I'm a dollar cost average person. Got a video coming out in a couple days, 3 or 4 days. It talks about dollar cost averaging. What is it? Why it's important. Putting the same amount of money in the market consistently, so you don't miss the market on the way down, and you don't miss the market on the way up. Most people miss the market on the way up, and it's the market on the way up that has some of the biggest returns. But people miss it because so many people are trying to time the market, jump in, jump out, jump in. Once you jump out and you try to jump back in, you missed the swing up. And by missing the swing up, you miss tons of returns over the course of 5 and 10 and 20 years, because you're not in there when you should be in there, because you're trying to time it. My thing is, you want a dollar cost average. No matter what the market's doing, going down, going up, doesn't matter. Stop trying to time it. Remember, it's not the timing the market, but it's the time in the market, right? And also invest in things you understand. Part of my strategy, as you saw, was sectors, certain ETF sectors. There's certain sectors I don't like. I don't want to invest in the pharmaceutical industry. Okay. I don't want to invest in healthcare ETFs. A lot of healthcare ETFs carry large pockets of pharmaceuticals. So I stay away from that. And I don't really know much about the pharmaceutical industry anyway, right? I'm the type of person that I don't take medicine very often at all. So when somebody says, oh, and I hear people around me all the time, people just know all these different medicines. Oh, that's Sewelluisfil or Dominalisfil. I don't know the right words, right? But like, what kind of, you got the boom, 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 boom. And I'm saying, how do you know what all these medicines are, right? I have no clue about medicines at all. I don't know. I can't name them. Right now, I don't think I can name a medicine, right? I don't take medicine, so I don't know what they are. But a lot of people around me, like I think most people are taking medicines, and I don't take them. So not that I'm against people that take medicines. It's just that, thank goodness I've been pretty healthy and haven't needed a bunch of medications. But I just don't want to invest in the pharmaceutical industry. Not something I believe in. But I know about REITs. I understand technology. I understand the financial sectors, right? JP Morgan Chase and all those guys, and what they do and how they make their money. So that's what I'm in. I invest in things I understand. That's a part of my strategy, right? The other piece of the strategy, which you didn't see, was make sure you can risk what you can afford to lose. Don't don't put the rent money into Nvidia, please, right? And I have now. You don't need as many ETFs as I have in my strategy, right? I like to have a lot of diversity, even in my ETFs. So you don't have to have that much, right? You could have 2 or 3 ETFs and be cool, because you could have 500 stocks or 500 stocks in the bucket for this ETF, 300 stocks in the bucket and you're good to go. I probably have more ETFs than I really need. I have a good amount of overlap on some of those funds, right? But that's what I got, right? And you need a strategy for you. The purpose of this video is to say, hey, get yourself an investing strategy. Let's see. I'm going to go back to the chat. I haven't looked at the chat in a while, guys. Bear with me. Thank you for being here, Helen. I appreciate it. Let's see here. Boston. Let's see. Hey, Boston said I was waiting for him to throw his pitch. I should throw my pitch. I work very, very hard, Boston. I deserve to throw a pitch. And so, yes, there's 24 laws of money in the description box. Yes, I do one-on-one financial mentoring and coaching. Yes, I have another platform where you can join the platform at 2 different tiers, or you can join for free. Yes, I'm going to say all that because guess what, Boston 617? I work really, really hard. I work really, really hard. But guess what? You got the luxury of getting all this stuff for free. You don't have to buy anything from me. You get it all for free. I'm just telling you what's available in case you want to go a little bit deeper. Take another step. Greenville, South Carolina's in the house. Brady, good to have you here. Let's see here. 2024, can you max out Intel? I'm not sure what that said. SWPPX. SWPPX. I think that's on Schwab. Let's see here. Brady would do good. This is how people mess up. Yes, they do mess up the bag. In my Merrill Edge account, I'm only sticking with 3 funds. That's all you need, O'Brien. You don't have to do all these extra 8 ETFs like I do, right? Boston said VOO and maybe some QQQ. Nothing wrong with that. Can be a two ETF portfolio. I'm okay with that. I really am. Somebody said, which one is the one to keep VOO SPLG? Ask that again, Leo. I'm not sure how you asked that. Somebody said I like Main Street Capital for dividend ETF. Excellent. Let's see. O'Brien, always look at the expense ratio. Absolutely. That tells you how much that fund cost to actually administer the expenses and fees and so forth. Let's see. What's the breakdown of sectors? Oh, my goodness. The sectors there's all types of sectors. There's telecommunications. There's financials, as I said. There's consumer staples. There's the real estate I mentioned. There's utilities, right? Energy. I mean, there's all different types of sectors. I say that's a good Google question, and you'll see about 30 or 40 of them, maybe 20 or 30 of them. Let's see here. Fidelity and Robinhood for me. All right. Auto War. Fantastic. Let's see. Mrs. Moore said, I agree. Smart money, bro. Not sure what you agree about. Is something wrong with the volume? I don't know. You tell me. Can you not hear? If you can hear me, give me a thumbs up. Let's see. SCHD is treading water. Is SCHD is the over at Charles Schwab. That is the dividend ETF, right? Let's see here. Miss V, I'm with you. My strategy is technology and real estate. Nothing wrong with that, Miss V. That's what you know. I think Miss V is a real estate person. There you go. Let's see here. Let's see. And I appreciate you guys helping each other out in the chat. That's really important. Let's see. VOO, VUG, and VGT. Great. Who else has SCHG? Let's see here. Yeah, SCHD is trying to get a 4% dividend yield. Yeah, listen, when you get ETFs and stocks and so forth that have really, really high dividend yields, I'm always a little leery of that, right? I don't want to have my dividend yield too high. I want, let's say if we're talking about single stock, I want that firm throwing that dividend back into the growth of the company as opposed to giving me a dividend so much. I'm not against dividends at all. I just usually throw them right back in and reinvest them. Let's see. I've been adding some VGT too. Let's see here. FSELX is a good mutual fund on Fidelity's side. Fantastic. Namisha said, make your own bucket. Yeah, if you invest in a bunch of single stocks, I always suggest a whole bunch of single stocks. By the way, let me say this too. Over on that other platform, we're going to be doing some lives over there that are specific only to that platform. And I'm going to take you guys along with me, and I'm going to start dibbling dabbling more into individual stocks on that platform. And I've already got Schwab. I'm going to do it on Schwab. Schwab is set up. I'm going to go into their Thinkorswim platform that they purchased from TD Ameritrade. I'm going to go into that platform and do a lot of like stuff live together and looking at some of these things as a group. So I'll do some lives over there as well too. So if you want, that's a spot to be at, because I probably won't be doing a lot of that over here on this channel over here. On this channel, it's about the basics, the big picture, right? The big picture stuff in terms of investing, managing your money, managing your personal finances and all that good stuff, and growing your money, making more money, side hustles. That's the type of stuff we talk about over here. The big picture, laying the good solid foundation, paying off bad debt, all that stuff. Over there, we're going to deal a little more with some real estate and a little more with some individual stock investing as well. So that's something to look forward to if you are a member over there. And most of that is going to be for the paid membership over there. The free membership probably won't get a lot of that, because it's going to be more paid stuff over there. All right. So VOO is better, somebody said. Okay. I only have VTSAX in my Roth. Congratulations, 6P. Nothing wrong with that. Art of War said I have no REITs. REITs are interesting, right? REITs are very interesting. Typically, I don't see large returns on REITs, right? I'm not going to get 20% over 10 years on REITs, right? But REITs are is really more sort of value for me. And knowing what's happening with the commercial real estate out there is something you got to, and I follow all that stuff, right? So I love Schwab, great customer service and easy to use. Yeah, I'm over on Schwab now. I'm using Schwab for some of my more personal individual stuff. Somebody says I like VTI, has more weight than VOO. I'm more of a VOO person, right? As you saw, somebody said VOO tracks the top 500. VTI tracks the entire broad market. If you track VTI and VOO, the performance is very, very similar. Very, very similar. And so I just decided to go ahead and stick with the 500, S&P 500. Somebody said, I love REITs. So we got a REIT person in here. Okay. Yeah, REITs have been getting drove for a little while. Guys, get that hit the thumbs up button for me. Thank you, Mrs. Moore. Guys, do me a favor and hit that thumbs up button for me. Smash the like button. And I'm way behind in the chat, so don't beat me up. But please hit that like button for me so we can get this information out to more and more people. And if you're not watching me on YouTube, feel free to come over to YouTube. Join me at Smart Money Bro on YouTube, where we have these types of conversations about specifics in terms of investing sometimes, right? George is in the house. Somebody said they got VOO and VGT. VOO is heavy tech, right? And VGT is heavy tech, right? VGT is the tech ETF. Thanks so much, Pamela. I appreciate you. Yeah, I've had a one-on-one with some folks that are in the chat. And so I appreciate that heads up to everybody, Pam. Thank you so much. Wonderful to talk to you as always, and I appreciate your support as well. James, let's see, been learning as I go. Congratulations to you, James. It's all about learning. James, I challenge you though, James. I challenge you to actually have a written strategy, a written plan for your investing, a written investing strategy. Think it through and write it out. Think it through and write it out. Because when you write it out, you're going to be more apt to follow it. And you're going to be more apt to disregard things that don't fit in your plan, right? Otherwise, you're chasing all over the place. Oh, that's a good ETF. Oh, let me try that. Let me try that. And you have no specific direction based on your specific situation, right? That's the importance of a plan. Super important. Investing newbie here. Let me go ahead and put that on the screen. Thanks, RBG Court. Said investing newbie here. I have an individual and Roth IRA. What should I start with with my individual account? Mainly ETFs. If you're a new investor, I always suggest index funds or ETFs. Yes. So you can start understanding the stock market just a little bit. Now, when you start with ETFs and index funds, I suggest that you also, at the same time, be learning to evaluate individual stocks if you want to play in the individual stocks arena, right? If you want to play in the individual stock arena, think about it like this. I'm saying arena. Think about it like this. How many cities in America have two arenas right next to each other, right? One could be baseball, one could be football, one could be basketball, one could be baseball, whatever. But these two arenas, both of them equally cool, no big deal, sort of the same thing. They're both a sport. In one arena, you have your index funds and your ETFs. In the other arena, you have your individual stock picking. Now, there might be a third arena down the way that's day trading and options. We're not talking about that. Just these two. I'm talking to RBG. RBG, two arenas next to each other. ETFs and index funds is the easy enough arena to you can walk in, you can understand what's going on. It's pretty easy to do. That's the arena you want to play in if you're new to investing. This arena that has index funds and ETFs. But while you're over here doing your ETFs and index funds, be reading about and understanding and learning about the other arena that's the individual stocks and the individual stock picking and the individual companies and how to evaluate the companies. So you play over here in this arena for a while with ETFs and index funds as a newbie. And then when you learn some things and you're ready to dibble and dabble and dip your toe a little deeper into investing, if you ever want to do that, then you're ready to go play in the other arena that's individual stocks, right? But don't start in individual stocks, in my opinion, if you're new to investing. Now, if you want to take it and take the chance to go over there and play in individual stocks, go for it. You've taken a bigger risk when you do that, though. Understand, everything involved with money has risk, pros, cons, and risk, right? But my opinion, to start slow, ETFs and index funds. Great question, RBG. Thanks for asking that. I hope I answered it pretty well for you. Let's see here. Data center REITs. Okay, interesting. Data center REITs. The performance comes from top 7 holdings. If I'm doing ETFs, is just for income. And let's see here. VTI has 85% of VOO. Pretty much. That's why I don't do both. Now, Brady said, do you do covered calls? No, I don't do covered calls. But guess what? At that other place I'm talking about over there, Schwab, I'm starting to learn and do a little more learning. I know a little bit about them, but I don't know a ton about them, right? Because haven't done a lot of covered calls or options trading. But I'm going to start doing it. And I want you guys to go along with me over on the other platform, because we're going to start doing some individual stocks. And at some point, we'll get to covered calls and puts and all that. We'll do all that as well, right? And I'm going to take you guys along with it as I learn it. That'll be very interesting, right? Very, very interested. But I'll do a little learning and we'll talk about that stuff on that other platform a lot more. Appreciate that, James. Thank you, Mrs. Moore. Guys, don't forget, you got to smash the like button for me. Just tap that thumbs up. I really would appreciate it. Let's see here. Somebody said covered call can be done in IRAs. Let's see. Thank you. Excellent advice. I really appreciate it. You made that easily. Thank you. Okay, I appreciate that, RBG. I'm glad I could help you with that. Thank you. You're welcome. You're very welcome. The other platform is on Patreon. All right. That's where the platform is. You can go to Patreon, type in Smart Money Bro. But I want to do it over there. I don't want to do the join YouTube channel. And that's why I'm shutting that down the next day or two. So you won't be able to join this channel anymore. The only join that we can go deeper is going to be in the link in the description. It's the first link in the description of this video. That's the only place you're going to be able to join me and do a deeper dive. Right? Deeper dive with some videos over there that will be a deeper dive video, and we'll pull up a lot of the stuff so you can see it and so forth. So somebody said, I'm fairly new to this. In my Roth IRA, am I buy my index funds once a month? Oh, I don't know how you were saying that, Axa Girl, but yes, your Roth, and under your Roth, you can buy index funds or you can buy ETFs under your Roth, right? So Namisha said, would love to learn about options. Yeah, I'm going to be trying to understand options a little bit deeper. And I'm going to be talking about it a little bit with you guys over there, right? FX, AIX, Fidelity, absolutely. I'm going to let you guys go. I appreciate you being here. Urgent, urgent, urgent. Why you need an investing strategy. I wanted to share with you my strategy, why I talk about why you need a strategy that's written, spreadsheet, notebook, whatever. Write it down. I hope you got something of value out of this video, something of value out of seeing my portfolio in terms of my index funds and my ETFs. I hope you guys got something of value from that. The whole purpose was to say, hey, you can do it. I can do it. We're just regular retail investors. I'm not anything special. I'm just a regular old person. There's several people in the chat that I've had conversations with. I'm the exact same way when I turn off this microphone and jump on the phone or jump on a Zoom call. I'm a regular person, right? Who's trying to help other regular people get better with their money. And this is how you do it through these appreciating assets called ETFs, appreciating assets called index funds, and appreciating assets called stocks, right? So I appreciate you guys being here. As always, thank you so much. Do me a favor, hit the like button if you haven't already. Check out the free stuff in the description box below. And as I always say it, the best person to take care of the old you is the young you. Take good care of yourself and take care of other people. Until the next video, peace.